Okay, so I'll make you a co-host. Now you can share your video as well. There you go.
Nice to meet you, Steve, anyway.
Nice to meet you, Howard.
Yeah, Steve Volge, Howard friend.
Okay, I click on start video.
Should work now because I made you a co-host.
Yeah.
Or didn't I? No, it didn't work before. Now it did. Try again.
Okay, here we go.
Yeah, there you go.
There we go.
Oh, hey Howard, how are you?
Hi. How you
So
doing?
you're full screen. So nice to see you. And how long have you been trading, Howard? Because
Dale,
Hey, Steve.
as you see, I saved actually. I look younger, don't I?
Yeah, I've been trading since 2006-7.
Okay.
So,
Because I don't, it looks like it's aged you for being 23 years old. Anyway, so
I'm a very young 52.
Okay, well, it's going to be very important for you to share your screen. If you could do that, that's a green box.
Button,
so
Howard.
Let me do that. 1 second.
Okay.
Here we go. Let's try this.
You don't look 52, by the way. I can tell you that much. No, honestly.
There you go. Can you see it?
Yeah, got you.
Excellent.
All right.
Okay.
All right, beautiful, Howard. So, looking at this long-term chart of the DXY, and looks like you're a bear here, buddy.
Yeah, I am. So let me just get move this thing out of the way. So basically, what I've got is obviously the long-term trend for dollar is down. And when we're talking about long-term trends, we're talking about mega long-term trends. So looking at it with an Elliott head on, what I've got is a similar situation we are, I think, to where we were back in 2000, 2001, where the dollar had been positive for quite some time, had a good multi-year advance, but ultimately it was a corrective advance. So just to sort of go through the structure, way back then we had the dollar top at the Plaza Accord, and after that we had the big depreciation in the US dollar. That kind of found a temporary base back in '87. I think they did the Louvre Accord back then to kind of stabilize it because it was falling to
Plaza Accord.
I think they did the Plaza to devalue the dollar, and the Louvre to kind of stop it falling too much.
Oh, okay.
Anyway, but that was the back in '87 or so. That was the momentum low for that particular move. And from that point onwards, we saw that kind of like a big bounce, quite a large bounce, and then this kind of choppy decline to the new all-time low. And then we saw the big kind of rally to follow. So using kind of Elliott, if people are into that, sometimes it can work, but it seems to work on some of these big picture things. The decline from this point here was a kind of choppy B wave or B leg decline to the new low. In a kind of irregular, flat bear market correction.
Okay.
So effectively, the impulse moved down there, then the A, then the B, and then the kind of 5-wave C wave move up to the 2000, 2001 peak. And then we had this kind of like this very violent breakdown, 1, 2, 3, 4, 5 to the momentum low here. So at this point here, we were at a similar stage to where we were back in '87, '88. That was the momentum low. So the rate of change, all these kind of typical oscillators that you might want to whack on these charts, they tend to peak or top out in either wave 5 or wave 3 of wave 5 kind of thing, before you start to see this correction or counter trend movements. And since that point, we've seen that kind of choppy decline, this B leg moving to the new low, which was what, 2011?
Yeah, and look at that glaring divergence on that.
So
the glaring divergence of the rate of change when
we're
making new lows. Yeah,
exactly. Yeah, so that's a sort of typical B wave phenomenon which we saw in the last cycle here. So when we got the momentum, the price low in '95, that was the massive divergence on the rate of change, the 24-month rate of change, which I like to use. So that kind of called the bottom for the B wave. And since then, we've had this kind of 5-wave structure to the recent high.
Yeah.
So this is where I think we are now. That's why I've circled it in green. So I think we're at a very similar situation to where we were back in 2001, 2002 when it topped out.
What would change the count?
I don't think a whole lot will change the count. I think we could see a marginal new high. That always can happen. But I think to change the count, you've got to start to see it really ramping up in some sort of third wave up here.
Okay.
So you could.
So
you could,
we could go 105 or so and not change it.
yeah, I'd say so. I'd say so.
Okay.
But I think when you get to this kind of situation, I think playing around with these short-term subwaves against the trend can be a little bit dangerous if your big picture view is down.
Okay.
So
right.
yeah, so just sort of coming back to the recent action in terms of, you got the big divergence on this recent flip higher on the dollar.
Okay. Why did you choose rate of change as a momentum indicator?
Yeah, I like rate of change because it hasn't got an artificial ceiling. So
like RSI does and MACD does, all of those others have an artificial ceiling?
yeah, I'm not a big
I mean,
fan
like
of
100.
Yeah,
Oh, I see.
I'm not a big fan of things like stochastics and RSI, which have the artificial ceiling.
Oh, I see. Because you could go minus, you could go under zero. I see these minus 20 readings.
No, not so much. No, more in terms of you can just kind of make new highs in the price, but the oscillator says it's overbought, and then you're missing a lot of the move. Whereas a divergence in an indicator which doesn't have an artificial barrier is a real divergence, in my opinion.
Got it.
So that's that's the kind of theory behind that for me. So I think big picture, I think is dollar down from here, or roughly from here. Obviously, we can't pinpoint the exact turning point, but we can use shorter term stuff to to nail it and to trade from the short side. So looking for essentially, back. I think ultimately we make new lows in this thing because the major trend is down. But step at a time. If we go back to the previous low from a couple of years ago, that wouldn't be too bad, I don't think.
Okay, where is that? Like 85-ish, something like that?
So we're talking on this one, it's like 84.32.
Okay.
Yeah. So there's a lot of big support in that region. All
right. Pete likes your chart.
Sorry?
One of our attendees is saying nice chart. So okay. So I guess the question is, if the dollar is heading lower, what are your preferred longs against the dollar during this time frame? Could it be commodity currencies? Could it be euro, cable? Could it be some of the emerging market currencies? How are you looking to play it, Howard?
Yeah, I mean, I like most of them because I think it's going to be quite a broad-based move. I don't like sterling quite so much because I think sterling is going to be suffering on a relative basis. Let me just go across to the, here we go, a bunch of charts we've got here. So just go through a few of them. This is euro sterling, for example. I think that sterling is going to be suffering across the board. That's why this one is staying quite strong. So I think that we're going to be seeing some sterling underperformance against a lot of these currencies. Dollar yen. Sorry. Dollar yen. I think dollar yen has bored the hell out of most people, and just trying to sort of trying to imagine which way it's going to break one way or the other. But I think ultimately it breaks to the downside.
Okay.
We've been in a constricting range for quite some time.
Yeah, that's a nice looking descending triangle. I mean, it actually measures 75, doesn't it? 25 point range, breakdown under 100 would take both the dollar would go to new lows and the US dollar yen would go to new lows.
Yeah, I think obviously again with this one it's a frustrating one because the yen gets caught in the crossfire, or at least it has done for quite some time. But I think ultimately once this starts cracking through this 100 level, we're going to be off to the races on the downside. And
any of the correlations with US dollar yen that connects and reconnects many times? I mean, the obvious thing is if we're going to break down in the yen, I would expect lower yields. in the U.S., and is there a possibility for risk off while U.S. dollar yen is breaking down, or will it disconnect again from those correlations? Tough call, but
it seems to be have been ignoring that one. Obviously, we've seen the gyrations in the stock markets, and dollar yen has not really done it. So I don't know whether that doesn't count anymore. The yen as the reserve, as the safe haven. I don't know.
okay,
It seems to be doing its own thing.
okay, all right,
So yeah, so I think we need to see. I think ultimately it breaks down, but obviously we need to see it back through 100 just to really kind of kick it off and be sure that we're away.
all right,
Other stuff. This is Euro Swiss long-term chart. Euro Swiss. So more Swiss. I think the Swiss is more of a safe haven than the yen, generally speaking.
okay. So you'd be looking for another low here?
Yeah, I think that ultimately breaks down.
Okay.
And I'll come to dollar Swiss as well, which obviously once we get through a threshold on that one could be a real trigger for that kind of move. But yeah, I mean, long term it's stuck in a range. It goes down. You get these big breaks down, but ultimately the major trend in this thing is down. So I think this one eventually breaks. This is Euro Dollar Monthly. So big picture Euro Dollar. We've had this kind of very begrudging decline over the last few years. No momentum in the decline, and it's really struggling at this these kind of big levels down here from a few years back. And I think the choppy action that we've seen of late is kind of indicative of basing.
All right.
So there's no real desire to take this thing down, down through these levels. So I think once we can get, break up through this 115 basically, we're away on that one.
Okay, and I will say that you called, I think it was back in 2016 or so, when you were bullish the euro, looking for 125. It's amazing. It's like 3 years ago we talked about that. We have some history here, but can you believe I remember your call from that?
I'm glad someone does.
Good one. Well, your P&L will. So who needs a fan club if you're making money? So really nice. That was a great call. So perhaps we get something like that, or maybe even some type of fib extension of that wave that we had from, what was it, 103 to 125, 22 cents. Maybe we get 1.618.
Yeah, I mean, even if this thing's stuck in a range over the long term, I think we're at the bottom of the range. So
okay, all right.
Yeah, so if you're bearish euro long term, then maybe it's a case of 120 and change, and then we top out, that kind of thing.
Okay.
But for me, looking through it through the prism of a weak dollar over the long term.
You're in Australia, right, Howard?
Sorry?
Are you in Australia or the UK?
I'm in Switzerland.
Oh my gosh, okay. Oh, you know what? There was a trivia question that my buddy asked me yesterday, where it asked, which country is it illegal just to have one gerbil? And they named Iran and all these other countries. Do you know what country it's illegal to isolate and just have one gerbil?
Go on.
Your country.
No.
Yeah, check it out. Switzerland has a law that it'd be illegal just to have. So if you have one gerbil in your house, you know what? I'm turning you in. Okay. Anyway,
let's keep it between me, you, and the rest of the
Let's keep it between you, me, and Richard Gere. Anyway, all right. So
we moving swiftly on. We digress.
Yeah, let's move swiftly. All right. So
okay. Just flipping through some of these things. Okay. So this is cable.
Yeah.
So obviously we had the breakdown briefly through the swing low a few months back, and then the snap back above it. And these are monthly bars, by the way. So right. We can.
Do we make a new low there, or head towards parity?
Well, that's the thing. Because as I say, I'm sort of in two minds, because I think the dollar is going down big time, but I think sterling underperforms. So maybe we just kind of like chop around these levels, around this kind of 120, 125. You know,
So
just
people buy anything and lay it off against a pound, and they should get good appreciation.
yeah, yeah,
Long anything against cable.
yeah. I think, yeah, I think, yeah, this is, it's got potential to get these kind of like, you know, knee-jerk reactions and we push down. But I think ultimately a weak dollar is going to support this thing longer term.
All right.
But as I say, it's not at the top of my list to buy against the dollar.
Okay.
Okay. So dollar Swiss. So this one has been a bit like dollar yen, been very boring for quite some time. But bearing in mind what I was saying about Euro Swiss ultimately being bearish, dollar being bearish, and I think even dollar yen eventually breaking down. We've got this level here at 91.87, which I think that once that goes, that will be the sign that we've seen the end of this whole correction from the swing low back in 2011.
So does the S&B? You know, they're pretty much they try and control Swiss. They're one of the central banks that really are pretty active. Does that mean they're going to just let it go?
Yeah, well, you know, as you say, they do like to step in every so often. So you'll get these big bounces against the trend. But I think if it's going to be a Swiss move that's going to, you know, drive it much lower, you know, straight away, or it's going to be just part of this downtrend that's unfolding in the dollar.
Okay.
So I think kind of a perfect storm. We start to break down, and then maybe we start to get some Swiss news as well that sees this accelerate eventually.
Okay.
But I think we need 91.87 and below to really say that all the people that have bought above it are long and wrong.
Okay.
So that's that one. Kiwi dollar, similar kind. Well, Kiwi dollar is basically a bit like cable in terms of it broke through the previous swing low, big momentum divergence on the breakdown, and now we're starting to work a little bit higher. So I think this could be quite a good one out the traps once the dollar starts to really go.
You favor that over Aussie?
Be honest with you, I've not really done a whole lot of Aussie Kiwi analysis. I think they both look pretty similar.
They are.
Fair.
Although, you know, people trade Aussie Kiwi, you know, there's outperformance of, I would think that Aussie would outperform, but, you know, it's pretty much the same.
Yeah.
So, okay. Maybe
I'm quite positive on gold, so maybe Aussie does perform if we're talking commodity currency stuff.
Okay. All right.
Okay. Dollar CAD. So dollar CAD is rejected quite sharply from the previous swing high from a few years ago.
Yeah.
This one again, it's kind of we've come back into the range. I think there's a lot of people trapped above this on this kind of inverted head and shoulder or type thing here. So again, in line with general dollar weakness and maybe a little bit of commodity strength, this one perhaps comes back down and forms a big top pattern here.
Okay.
But I think not quite as aggressive on this one as I am on the Aussie and the Kiwi. It's not quite as clear, I don't think.
All right.
Okay.
Maybe that has something to do with crude too. All right. There's the Aussie Monthly.
Possibly.
Okay.
Yeah. So a little bit similar to the Kiwi pattern where we had the swing low. You know, we're in a downtrend obviously, but we've had this big flush out to the downside amid some pretty bullish divergences here. Quite a sharp rally on the rebound, and we're back above the level. So we've got a lot of trapped short sellers here.
I love when people are trapped.
So
If
yeah,
it's not me.
I think we can. I think these things, the way they start off with a bit of a squeeze, and people don't really believe it, and then before you know it, you've got a trend developing.
Right.
So yeah, I think the Aussie looks to be pretty good for 80 plus levels initially.
Okay.
Euro yen, another not very exciting one like dollar yen. We've got this massive triangle which broke to the downside back last year. More sideways action here. And this month so far, an attempt to go higher, but we're back down towards the previous month's close. So we're kind of like a long upper shadow on the candlestick here.
Okay. Yeah, that's interesting. Okay.
So
So
that
it
looks,
was kind of like a test of the breakdown almost this month.
yeah, but it's kind of struggling to get back into the the old back above the old triangle support line.
Okay.
So again, we could see a big yen move ultimately perhaps in line with the Swiss. But yeah, I think euro yen is struggling, so it could give some weight for dollar yen going down.
Okay.
And back to euro sterling. So what else did I want to say? Gold and the euro. Long term gold. Can you guys see the chart here?
Yep. Yeah.
Okay.
That's gold euro on top or gold dollar on top?
So got gold dollar and actually gold futures and euro dollar spot cash.
Okay, I got it.
So so essentially, you know, we had the gold bull market. It got quite bubbly and accelerating back here.
Right.
So and the euro didn't. It was making new highs up to that point. So we had this divergence here with lower highs on euro dollar. Ultimately, the bubble burst on gold here at the all-time high. And then we came back to more reasonable levels back in 2015, 16. So we stabilized in gold, and then we got this kind of Dow theory buy signal here.
Yeah.
Last summer.
1360, yeah.
Yeah.
1380. Any chance of, with what you're seeing happening with the dollar, probably very low chance of it coming back to test that breakout anytime soon?
Gold, no, I don't think we're going to come back down here. I think the pullbacks are quite shallow now on gold.
Okay. You have a long-term target in gold?
Yeah, I think we've got to see this high. I think we've got to see the all-time high and go above it ultimately.
Okay.
This whole move from the all-time high to here is a nice corrective decline, in my opinion.
Okay.
So,
We were getting a question from one of the attendees. Do you follow crypto?
do I follow?
Yeah, cryptocurrencies, Bitcoin, any of that stuff? And if not, what's your view on them, especially being a gnome from Switzerland? A lot of people are thinking it's going to be a good negative corollary investment against a problem with the dollar.
Yeah, I'll be honest. I don't have a big view on the cryptos.
Okay.
I think it's all pretty much kind of it's you know, quite volatile. It's just maybe momentum plays on that stuff, but I don't know in terms of value how to get a handle on the thing. To be honest with you.
Okay, fair. That's fair. So if you don't have any other charts, Howard, have you wrapped up what you wanted to talk about?
So the only other thing I wanted to say was I just wanted to show a couple of things here. This is sorry, let's just go back to the a couple of systems. At heart, I'm a systematic guy, although I do use Elliott from time to time for long-term views. But a few levels to watch based on some of these long-term trend-following systems that I use. I've got a system which works really well on dollar index, euro dollar spot, and previously in the past Deutschmark futures. I'm sure Dale, you remember those ones.
I remember Deutschmark, yeah.
Okay.
Yeah. Germany would like to go back to it, wouldn't they?
Yeah. Back to the 70s. Back to the
yeah.
I was there in 77, and so was my hair. You know?
Okay. All right. You still have some.
So what I like to look at is a combination of obviously I'm sure people are familiar with Donchian channels.
Yes.
So I like myself on a weekly basis. I like the 30-week Donchian channel. That's quite a good one for currency, in my opinion.
Okay.
And but I use it in combination with a swing high, pivot low indication. So I'm using, for example, pivot high, strength 6. So the 6 bars to the left are below, and the 6 bars to the right are below the swing high. That kind of thing.
Okay.
And just quickly to show you a few things. This is Deutschmark, way back. This is kind of an equity curve if you follow the thing.
Okay.
So basically, it does okay in terms of calling the trend. 73% hit ratio on the Deutschmark back in the day, and that's the equity curve. And then you go along to the dollar index. 1985 to present day, so using exactly the same indicator, if you will, or system. So nice equity curve on that. again, yeah, performance summary, profit factor is quite good, 61% hit ratio on the dollar index, and euro dollar comes in. So euro dollar is, let me just collapse these. So profit factor 638%, profitable 68%. Nice equity curve on the thing. So exactly the same trend following indicator I'm using back to 1976, from 76 to the present day, basically. So I think it can be quite a good one to watch, and the trigger levels based upon it. Obviously, no Deutschmark because we're not doing Deutschmarks anymore. But that 114.95, 115 on euro dollar above us, that is the trigger level for the buy.
Okay.
And dollar index, the trigger level for the sell is 94.50.
So what's the best way, besides your Twitter handle, for people to reach out to you and talk to you and follow you and maybe work with you? What do you have a business model right now?
Sure. Yeah, I've got a number of things I'm doing. I run what I call a excuse me, a model trading portfolio. Most of my algos actually are short term, from day trade out to multi-day swing. And what I do is I run a if you will, a kind of a model portfolio for clients who want to gain access to really good algos that do very well over that kind of 1 to 5 day time frame.
Do you have a website, Howard?
Yes, I do. So
why don't you show it?
I'll show it. Here we go. 1 second. So hf-systems.com.
You might have to stop sharing your screen and do a new share.
Okay, new
Maybe,
share. Here we go.
if it's on a different.
Okay, new share. Share.
Okay, there's your disclaimer.
Okay, gone.
Okay.
And products and services wise, I run courses for people that want to learn how to do this profitably over the long term.
Okay, so it's hf/systems.com to get to Howard's website.
That's right.
And Howard is a CMT, so you know.
That's right. I've held CMT since 2004. I think I joined back in 1999.
Okay, and there's his email. Take a screenshot. And Howard's Twitter handle again is break retrace. There's a hyphen in between. You want to show your Twitter so people could maybe follow you? I don't know if you're that active on Twitter anyway. But
yeah, I'll be honest. I'm not. LinkedIn's quite a good one, actually.
Okay, you're posting your stuff on LinkedIn. Okay.
Yeah, yeah. I think if people want to catch me, LinkedIn's quite a good one, or just find me an email. That'd be good.
Okay. All right.
And just on a parting note, on the model trading portfolio that I'm running, this is an account I've been doing for the past nearly 4.5 years. Basically, all of my algo system trades go directly on this account. This account gets copied to other accounts, and the account risk is 3%. The maximum drawdown on the account has been under 2%, and this is the kind of performance over the last 4.5 years.
That's really something. I'm more impressed with the maximum drawdown being down only 2 or 3%. So, and you risk what, 3% per trade, or 3% for the whole account?
For the whole account. So basically, okay. I trade maybe up to 10 algos at the same time. And the inherent risk on the portfolio is a 3% max draw from a high watermark, but historically it's never been above 2%. So I trade very conservatively.
Okay, and what's the status with COVID in Switzerland?
People are out and about. I went into town earlier on, and people are, they're doing the distancing, so they're being very, very careful about that. But it's not stopping people. People over here, they don't like to be told what they should and shouldn't do. So
yeah, people wearing a face mask
there's a few
when they're out.
There's a few. I think there probably should be more, but I think the older folks in particular, they are really being very careful, obviously. But but yeah, I think life is it's going on.
Okay, and your email again? Didier is asking for your email again.
So
And
hfsystems at gmail.com.
okay, there it is. Take a screenshot, Didier. And Howard, I'm not going to make the same mistake and let yours pass again. So
No.
I'll get a hold of you a little later on, and we'll schedule something for the fall. It was great to, talk to you. You've been my trading warrior brother for years now, right? If you forgot, I'm reminding you. And I want to thank you for coming in and sharing your looks and everything with our community today. And
Pleasure.
wish you, I've always rooted for you. I continue to. So thanks for being here to edify F.A.C E, Howard.
Absolute pleasure, Dale. Thank you very much, my friend.
All right. It was great having you. Everyone that's Howard Friend, you know how to find him. And that's going to be a wrap for us on the week. Remember, don't just count your pips, count your blessings. And same to you, Ariel. You're welcome. Shepard, everyone. See you guys all on Monday. Adios.